Use it or lose it. In China today, some digital yuan comes with an expiration date. Break the tension. This is real, not sci-fi. Right now, governments and tech rebels are racing to reinvent cash. By 2025, nearly every country is in the game. One tracker finds 137 countries, 98% of global GDP, exploring central bank digital money. That means us, you and me, because money touches everything. Why does it matter? Imagine our dollars, rupees, or euros becoming bits on a screen. Cryptocurrencies promised freedom, no banks, no borders. Central Bank Digital Currencies, CBDCs, promise efficiency and control. The battle is for who holds the rules. This fight is quiet but huge. It's about privacy, power, and the future of our economy. Let's break it down. Cryptocurrencies, think Bitcoin, Ethereum, are like digital gold and software combined. They use blockchain ledgers, global networks of computers verifying transactions without a middleman. There's no king or Fed in charge of crypto. Instead, rules are coded in math. For example, Bitcoin has a fixed cap, 21 million coins. Transactions can cross borders instantly. You can send a Bitcoin anywhere, anytime. But there's a flip side. Crypto's value swings wildly. One year it doubled, another it crashed. In fact, a major crypto crash in May 2022 wiped out over $50 billion almost overnight. Crypto also faces scams and hacks. Remember FTX Terra. Still, it attracts people who want an alternative to banks. In India, Pakistan, Vietnam, and many other countries, grassroots crypto use is skyrocketing. Even the United States approved Bitcoin ETFs by 2024, drawing big money players. CBDCs are very different. Think of a digital dollar or digital rupee issued by your central bank. Official money in electronic form. It's still US dollars or Indian rupees, just live on a new kind of ledger. If crypto is like a rebel app, CBDCs are government apps. By mid-2025, 137 countries are exploring or piloting CBDCs, from Sweden's e-krona to Nigeria's e-naira. 3 nations, the Bahamas, Jamaica, Nigeria, have already launched digital cash. These are mostly aimed at domestic use. Pay for groceries, bills, like normal money. Sometimes CBDCs are tested to boost the economy. China's digital yuan trials, for instance, injected extra cash with strict expiration dates to make people spend. Use it or lose it, literally. Norway even tried a healthy food wallet that only let you buy fruits, not chips. These examples sound absurd, but they show one risk. Programmable money means extra control. How do these systems work day to day? Crypto. You have a digital wallet with a key. You send coins through the network. People, miners or validators, check it. No single server can flip your account off. But it's slowish and can cost fees. Bitcoin uses a lot of electricity to mint new coins, for example. CBDCs, you might get an account on your phone or through a bank. Every transaction is recorded by the central bank. They can make it fast and cheap, no middleman fees, and even work offline with chips. But yes, it's all recorded. Every payment you make could be tracked by someone. Let's reveal the stakes. Governments hate losing control of money. Crypto's biggest sin to them is anonymity and instability. Wallets can hide who spends what, taxes, money laundering, and people might skip banks and bonds. Less demand for government debt. As one report bluntly lists, governments fear crypto's decentralized anonymity, its use in crimes, and its defiance of regulation. So they're racing to offer their own digital currency with trust. Maya-G CBDCs. They say, we'll give you crypto's perks, fast digital payments, without the downsides, crime, volatility. It's centralization. We get the tech, they get the steering wheel. This is hype versus reality. Crypto hype said, bank the unbanked. Beat inflation, be your own bank. Reality? Bitcoin is up and down. Most people treat crypto like an investment, and regulators are tightening the screws. On the other side, CBDC hype claims, no more cash, faster transfers, big financial inclusion. Reality check. Some pilots are small, and in places like Nigeria, the naira launch has had disappointing uptake. Cash is already rare in China, so the digital yuan mainly replaces apps like WeChat Pay, not physical bills. It seems politicians especially want CBDCs to reinforce power. For instance, in 2025, the US Congress actually moved to ban any Fed retail CBDC, citing privacy fears, while simultaneously regulating stablecoins under a new law. In plain English, no government crypto for you, but we'll legalize private digital dollars. We're now zooming out. Why should you care? Because it's personal. Picture your wallet in 2030. It could either be a secure crypto wallet that only you control if you hold private keys, or a government-backed app where they can turn features on or off. In the private crypto scenario, you face wild price swings. One week you're rich, the next you're broke. You also worry about hacks, or a change in law banning your coins. Or if CBDC wins, every purchase you make could be logged. Need cash for something you don't want disclosed? Forget it. Your government could even pause your CBDC access at a moment's notice, or set rules on what you can spend. Want to see your taxes paid automatically? With a CBDC, your fines for jaywalking might auto-deduct from your account. Thank you, China. It's not just theory. The digital yuan trial in Suzhou was tied to facial recognition to levy fines instantly. There's also the programmable money pitch. Smart contracts could be great. Automatic rent payments, or money that disperses in microdoses. But programmable money also means control. A digital euro might promise privacy for small buys, but who sets the conditions? Even the US lawmakers' bill calls China's system a cautionary example of state control and warns about programmable money risks. Europe is trying to do it differently. The ECB wants the digital euro to preserve cash's privacy, small payments anonymous, while CBDC friends claim it will modernize payments. It's a delicate balance. What about the global chessboard? Crypto's rise has geopolitical ripples. Big stablecoins and crypto markets are pushing countries to innovate. China's in the lead internationally, 260 million users in its pilot, and trillions in transaction volume. It's even hoping to challenge the dollar's dominance. The euro is next. By late 2025, the ECB is targeting pilots in 2027, and possible launch around 2029. The US is idling on its digital dollar. Trump's 2025 order halted retail CBDC efforts, while Congress is busy with private stablecoins. Globally, more cross-border CBDC projects are popping up after sanctions showed the need for new payment rails. Meanwhile, crypto is borderless by design, which both upsets sanctions and threatens financial control. So where does this leave the consumer? With choice and risk. You could hold crypto, secure from any single government, but volatile and sometimes outlawed. Or you could rely on a CBDC, stable and backed by your country, but watched over like never before. Real people feel both excitement and dread. Maybe you think crypto will protect your savings from inflation. Or maybe you welcome a digital euro that respects your privacy for coffees, but still fights online crime. One irony, the whole debate might end up with multiple systems coexisting. In fact, some experts say maybe cash, crypto, and CBDCs will all stick around in different roles, but others warn that if one type gains too much power, it could swallow up the others. In the end, the stakes couldn't be higher. Our money underpins everything: jobs, markets, even our freedoms. This battle isn't over. No clear winner has emerged, and each side has powerful backers. So what's next? Will crypto truly liberate finance, or will governments tighten their grip with coded cash? Maybe it won't be either or, but one thing is certain: the future of money is unsettled. And that begs the question, in the years ahead, who will really hold the keys to your wallet? Think on that.